I want to ask a question to those facing financial challenges. Do you ever feel weary of the constant struggle? Do you find it frustrating to witness influencers like me earning more money while you're unable to secure a job as a software engineer? Are you tired of funding conflicts overseas while struggling to afford a home? Welcome back to Trend Visionary. Let's shift our focus to Bitcoin. The price has surged by about 100% in the last few months. Maybe it's time to consider perspectives like mine instead of underestimating them. Today, we're diving into a topic that's got everyone buzzing: Bitcoin ETFs. Stick around, because this might just be your golden ticket to financial freedom. From Bitcoin calls to FTX collapses, the current price sits at $35,000. Looking at the BTC-ETH ratio, Bitcoin has surged about 40% against Ethereum in the past year. What triggered this Bitcoin rally? Interestingly, it coincided with the collapse of FTX in November of last year. Many believed they were buying Bitcoin through FTX, only to find out that their funds were misused to purchase Robinhood stock or cover legal fees. Now people are genuinely investing in Bitcoin, rather than just imagining they were. It's a dynamic landscape, and the shifts are worth exploring. Bitcoin ETFs on the horizon. In recent months, there have been murmurs about FTX suppressing Bitcoin prices under $20,000, adding an intriguing layer to the crypto landscape. What's capturing attention now is the anticipation around Bitcoin spot ETFs. Despite years of filing and SEC delays, there's a growing sense that the time is ripe for these ETFs. The key factor? There are a series of looming deadlines, with the final one for the ARK Bitcoin ETF set for January 10, 2024. Analysts speculate that this could be the moment the first Bitcoin ETF gets approved in the US, potentially opening the floodgates for approval of the dozen other ETFs in the pipeline. Examining the risk-reward ratio, the potential upside of approval hints at a transformative period in the cryptocurrency market, with a domino effect likely to trigger the global adoption of Bitcoin ETFs by countries and financial institutions alike. Explore the intricacies of these deadlines, the implications, and the compelling reasons to consider a bullish stance in this evolving financial landscape. Examining the impact on asset acquisition, market dynamics, and the historical precedent of gold ETFs. As the anticipation for Bitcoin spot ETFs intensifies, a frenzy to partake in the forthcoming market surge is evident. Institutional players are poised to rapidly amass Bitcoin to meet the escalating demand, creating a scenario where they may need to swiftly acquire and distribute the asset to their clientele. The looming institutional demand is multifaceted, extending to companies contemplating Bitcoin for diversification on their balance sheets, retirement accounts seeking new investment avenues, trust accounts reassessing their strategies, and various businesses recognizing the potential of this digital asset. Drawing from history, the approval of the gold ETF in 2004 serves as a compelling precedent. Following approval, the price of gold skyrocketed by an astounding 400%, maintaining a sustained high. This surge reflects the substantial demand for a safe haven asset, with Bitcoin often hailed as the exponential gold. The recent endorsement of Bitcoin as such by Fidelity's Director of Global Macro further solidifies its position in the financial landscape. Delving into the potential upside, investors are eyeing a substantial 4x increase in value, reminiscent of the price action witnessed with the gold ETF. However, navigating the realm of uncertainties, a downside scenario looms if the SEC chooses to reject or delay the ETF filings. The market remains in a delicate balance, with the January 10, 2024, deadline serving as a pivotal moment of anticipation and trepidation, navigating the impending ETF decision and unveiling the digital gold revolution. As the market eagerly awaits the SEC's decision on Bitcoin spot ETFs, the potential for a 4x surge against a modest 10-20% downside creates an enticing risk-reward ratio. Despite the inherent volatility, 2 from 3% of all Bitcoin hasn't moved in over a year, suggesting a strong base of long-term holders. The risk-reward analysis, as illustrated by a Fidelity director, positions Bitcoin in a league of its own, distinct from traditional assets like gold. While gold exhibits a steady risk-reward ratio, Bitcoin, as a nascent asset class, offers an unparalleled opportunity. The imminent decision on ETFs adds a layer of anticipation, with the crypto ecosystem already flourishing on platforms like Robinhood and Fidelity. The inevitable rise of Bitcoin ETFs seems less a question of if than when. given the widespread adoption and integration of cryptocurrencies into mainstream financial tools. As the digital gold narrative unfolds, the choice between caution and embracing the birth of a new asset class becomes a defining moment in financial history. Navigating the SEC decision and the crypto frontier. Should the SEC reject spot ETFs, it propels the market into an intriguing space where brokers might be compelled to launch their crypto versions. Picture a landscape with Schwab Crypto or Morgan Stanley Crypto becoming the norm. While individuals can set up investment products independently through platforms like Coinbase, the simplicity of a spot ETF is undeniable. Despite potential rejections, people are already navigating this space, and the SEC-approved crypto futures ETFs suggest a certain acceptance. In the global arena, some countries have greenlit Bitcoin ETFs, such as Canada, Germany, Jersey, Brazil, and Australia, with Hong Kong eyeing the possibility. Financial giants like BlackRock and Fidelity are eager for a slice of the ETF pie, given the lucrative fees, ranging from 0.5% to 1%. Coinbase, positioning itself as a custodian for multiple spot Bitcoin ETFs, anticipates increased credibility, liquidity, and market stability. With 52 million Americans owning crypto, Coinbase sees a new revenue stream through custody fees, making it a speculative play for those eyeing ETF approvals. Coinbase's meteoric rise in the ETF chess game. In the past month, Coinbase stock has surged by approximately 15%, indicating a potential market response to the anticipation surrounding Bitcoin spot ETF approvals. JP Morgan adds to the speculation, suggesting that multiple approvals may be imminent within months. The SEC is under pressure, with the risk of legal action looming if spot Bitcoin ETF applications face rejection. Notably, major financial institutions like BlackRock, Fidelity, ARK, Grayscale, and VanEck could be among those pursuing legal recourse. Examining the Bitcoin hash rate, which measures network security, it has reached all-time highs. Additionally, the Bitcoin halving in April 2024, reducing miner rewards by half, adds complexity to the decision-making process. While some may see it as a 50-50 choice, the notion is challenged, as life rarely presents decisions with equal outcomes. The right investment choice appears clear in hindsight, akin to an obvious 99-to-1 choice. But hey, we want to hear from you too. Drop your thoughts in the comments. Are you excited about Bitcoin ETFs, or do you have reservations? Let's start a conversation and learn from each other. Don't forget to give this video a thumbs up if you're as pumped about Bitcoin ETFs as we are, and share it with your friends who need to catch on to this trend. Until next time, stay tuned to Trend Visionary for all the latest insights and trends.